that we have Alder Ryan attending via WebEx. With that, the first order of business on our agenda tonight is the minutes of our previous meeting from 7/14 of 2020, copies of which are in the packet. Are there any revisions or corrections needed for the minutes? If not, is there a motion to approve? Motion by Herbst, is there a second? Second by Martins. Since we have a member on WebEx, we'll roll call vote so we can get everyone recorded. Martins?
Aye.
Ryan? Oh, try it again, Deb.
Abstain. I was not at the last meeting.
Okay, thank you. Watson?
Aye.
Herbst? Aye. And I'll vote aye as well. So the minutes are approved, four in favor and one abstention. Item number 2, discussion and possible action on the 2019 audit presentation from Clifton Larson LLC. And we have John Troutman from Clifton Larson with us via WebEx.
Good afternoon, everybody. Can everybody hear me okay?
We can, and we're receiving your video, so welcome.
Excellent, excellent. Again, my name is John Troutman, partner in charge, the lead on your external audit for the city. And really today's goal is really spend about 10-15 minutes just to discuss the audit and the opinion that we issued on your financial statements. And then just kind of go through a page or two of the financial statements and the Kafir and discuss that and discuss some of the fund balances that you have reported as of December 31, 2019. So with that, I'll start with if you're following along, I'll try to share my screen here. But also, if you're following along, I'm going to start in the government's communication letter. So I will share this screen here. Can everybody see that okay?
Yes.
Great. So this letter here is really issued at the end of the audit process, and it is a letter designed to kind of summarize really the audit process and some of the audit findings and some of the audit opinion as far as the opinion we issued, and then also just some accounting policies and accounting aspects of your financial statements that we just want to point out in a separate letter. Again, this is a completely separate letter to the audit itself and just used as a summary. So really, I'll go through this, and again, it looks a little different this year than it did in years past. And what this is really designed as a short, a shorter version of some communication that we want to go through. So it starts really with accounting policies. So again, management is responsible for selection and use of appropriate accounting policies. The significant accounting policies used by the city are described each year in Note 1 to the financial statements. So it's always good to kind of point that out and reference that, as far as that Note 1 just kind of wraps up all your the city's accounting policies in one note. And again, the financial statements and footnotes are prepared by the city, and that's what we audit. So good place to look for any of that information. We will point out one thing in that Note 1 this year, and that is as described in Note 1B. The city changed accounting policies related to custodial funds by adopting a Statement of Government Accounting Standards Board, or GASB, statement number 84, which is fiduciary activities. That's the audit standards that you have to follow when issuing your financial statements, and when the auditing standards we have to follow when we opine on those financial statements. And this is pretty technical GASB. This is something we had talked about in years past that was coming up. And really what it did is it just changed some of the things that used to be called agency funds and called them custodial funds, fiduciary activities. That's really related to the property tax collection in your city. So you collect property taxes, and that's on behalf of other jurisdictions, and then there's a settlement process. Nothing has changed with that, but GASB decided, the standard setters decided at the federal level that really should be accounted for and reported a little bit differently. And so you'll see that in your financial statements. Not a major change by any means, but certainly worth noting here because it is new in 2019.
Hey, John.
Yes.
I just wanted to give a little background. So these were not in your packets. So I think Bobby put them in your basket, right? So you know, between the financial statements and the letters that are issued by the auditors, to put them in the packet itself would make it kind of a long document. So I think those were passed out at the last finance meeting. So the financial statement would have looked like this.
The book was, yes.
So that's really what John Troutman is talking about. And I don't think it's as important. I mean, they can go back to the book and look at them at a different time. I don't know if we have
Yes.
extra copy. Okay, so, sorry about
Yep,
that.
absolutely. Yep, I apologize for that. And again, you don't have to follow along. I'll just reference that as far as that letter itself. And again, these are simple kind of highlights or things I want to point out. So again, thank you for that, for letting me know that. So I'll go back to that and share my screen. And then the next area of this letter is really kind of kicks off into the financial statements themselves and points out some accounting estimates. And any financial reporting has accounting estimates inside of it. We're just simply highlighting some of those that you're using, that you're essentially contained in your financial statements. And we really look at when auditing these, because they are estimates. They're not known exact numbers like most of the financial statements are. But under the accounting standards, we have to follow certain rules as far as whether they're reasonable and what their assumptions are and the basis behind them are. And then we also go another step further and we compare those estimates to your peers and the rest of governments in Wisconsin and the nation. And we take a look at those and make sure that they're in line and where they need to be and not outside of the norm. So some of those estimates are management estimate of other post-employment benefits. And again, OPEB or other post-employment benefits is based 100% on an actuarial report that you obtain and you hire that out and get that report, and we use that essentially to to report that in your financial statements. And again, that's under the other post-employment benefits based on that liability. Again, all those benefits in determining that it's reasonable and in relation to the financial statements taken as a whole. The second management estimate is depreciable life of capital assets. Again, capital assets, when you purchase them, are valued at cost and what you paid for them, and that value then is depreciated over time over the life of that asset. Well, the life of the asset is an estimate, because when you purchase that, you don't really know exactly how long that squad car or that building or the well or whatever we're talking about is going to last. So that's a definite estimate involved that's necessary in financial reporting. And again, there's benchmarks out there, and you're certainly within the exact range of those benchmarks with estimated lives. The estimated fair value of investments is based on ending market values. And again, based on information reported by the investment managers that the city works with. We evaluate each year the key factors and assumption used in valuing those investments and determining that they're reasonable in relation to the financial statements taken as a whole. Management estimate of sick leave is based upon employees' sick leave balance as of 12/31/2019 in this case, in this financial statement. And there are key factors and assumptions that go into that estimate as well. The remaining estimates are estimated allowance for uncollectible accounts on accounts receivable, and management estimate incurred but not reported, IBNR, that stands for insurance reserves that are based on actuarial projections of the expected cost of ultimate settlement and administration of claims. These are claims that occurred up until December 31, 2019, but may or may not have been settled by the audit date or into 2020. And then the final estimate that's contained in your key estimate that's contained in your financial statement is the estimate of net pension liability as related to the deferred inflows and outflows. Those are all information coming from the state of Wisconsin retirement system and the state of Wisconsin audit report. So again, all of those taken into a whole, we've taken a look at those and making sure that those are reasonable in your financial statements. Financial statements disclosures, again, the rest of this page kind of goes through all the different disclosures we want to make as far as a very quick spot to see where, how the audit went and things like that. And I'll just start with the opinion itself. We did issue an unmodified opinion, a clean opinion on the city's financial statements. And that's exactly what the city really goes and tries to set up their internal controls to really obtain that. So your controls all the way through your city financial statement process and financial reporting process are set up to really obtain that high level of financial reporting so you can get an unmodified opinion. Taking that one step further, the city of Wausau really goes beyond what is the norm, or what is the minimum expected unmodified opinion, and you go for a Government Finance Officers Association award. And what that does is a select group of municipalities in Wisconsin, and the country for that matter, submit their CAFRs to the GFOA, Government Finance Officers Association, and they are peer reviewed by people in the country, and they dissect your financial statements on a line-by-line basis and a footnote-by-footnote basis, and they issue an award of excellence. And again, that is very, very much an excellent thing to get as a city, and you certainly want to be proud of yourself to get that, because there's not a lot of municipalities that get that. So that's that your CAFR is subjected to that each year. And then again, the aspect of the audit, just in general, before we kick into the financial part of it in the financial statements, again, this year was a challenge. It was a completely, get some feedback there, completely remote process, and there was some on-site, but it was very limited due to COVID. So we certainly appreciate the time and effort that the staff of the city went through to allow for that, and to keep everybody safe, and to keep the audit team basically moving and able to get that information. It was a lot of work. We went through that entire audit season with that scenario, and it was a very challenging situation. But I'm proud of both the clients and ourselves as far as getting through that. So thank you for that. Definitely appreciate that hard work to get that done and make for a great audit process under challenging times. With that, is there any general questions of the audit? Otherwise, I'm going to dig in just a couple pages here of the CAFR, just to kind of talk about fund balances and things that you have. And then I'll open up for questions at the end. But if there's questions right now, I can certainly take them.
I think we're good.
Okay, I will go ahead and share my screen again, and we will kind of dive into the CAFR. And again, this is your financial statements as prepared by the city, and this is page 17 if you just want to make a note, if you have it in front of you, if you want to look at it later. And this is just simply the governmental funds balance sheet. And again, there's 192 pages of your CAFR, and I'm selecting this one as a kind of just a topic of conversation. I certainly open it up to anything else. But what this really reports is, as of December 31, 2019, here's a snapshot of where the city ended the year. And we take a look at the general fund. Here's your major funds here. Your major funds. There's 4 major funds: the general fund, the debt service fund, TID 3. Capital Improvement Fund are your 4 major funds. Then there's a column for non-major funds. That's all the rest of your funds accumulated into a subtotal there. For purposes of this discussion, I'm just going to talk about the general fund, the furthest left column. And I'm going to focus right down to the fund balance line on the bottom. And you can see that year ended with $13,631,000 in fund balance. That is comprised of 3 categories. You have a non-spendable portion of that 13 million, 3,286,000. And again, these are a hierarchy of availability. So non-spendable by definition and title is not spendable. It's not in cash and bank. It's not in your assets that you have liquid and available to you. It is money that you don't have. The majority of that being either advances that you don't have yet back from individual funds, or delinquent property taxes and accounts and uncollected, accounts receivable balances. So again, those are assets. They're in your asset balance. They're in the 13 million, but you don't have access to them as of December 31, 2019. But you do expect to get them. Then you come down a little bit and you see the next category is committed. Again, 980,000. Those are funds that are in the 13,631,000, but you've really you've earmarked those, you've committed those by formal action to say that 980,000 is for particular purposes. And those are all scheduled out in your footnotes as far as those individual purposes. But again, those are committed for a particular purpose. When you commit fund balance as a city, you can uncommit and recommit, but it does take formal action. So it's a little bit higher level of earmarked funds during the budget process. Then you're left with unassigned fund balance. So this is really the important number that you focus on, and it's really the number that carries into the budget year 2020 that we're in right now, that we're over halfway through. 9,364,682 is the unassigned fund balance in the general fund. So you can see your fund balances on the other funds. 1,078,000 in debt service is restricted. That money has to be used for future debt payments. And then you have an unassigned deficit in your TID, 618,000. Again, as you spend money in the TID, as you recoup that money in TID increment, this is a snapshot as of a point in time. So at this particular moment in time, you've spent more money than you brought in. The hope and the goal of any TIF district is to obviously fund that with tax increment. And over time, that up till closure, you hope that gets close to zero. And then you have an additional amount of capital project. You have restricted 1,141,000, and then committed of 1,335,000. Rounding out the major funds, you have an additional 8,111,000 in restricted for non-major governmental funds. Those are a number of different funds as scheduled in the back of the Kafir and rolled forward as a subtotal. You have an additional 1,378,000 in committed and an additional unassigned deficit of 3,800,000. So all said and done, total fund balances, total governmental funds for the city, 22,246,000. So again, that's a snapshot, obviously, of the balance sheet, essentially, of the governmental funds. And again, I'd open it up for any questions, any other pages of the CAF or any other information that you want me to go through. I'd certainly be willing to do that tonight, or just any audit questions in general. I'd be happy to take those as well.
Anyone have questions for John at all? Okay.
I would just, like to say that, as John mentioned, our financial statements really are designed to provide probably the best information, and that's considered, the best practice by the Government Finance Officers Association. The staff works really hard to accumulate all of this information and put it into the format as dictated by not only the GFOA, but by government accounting regulations. And, Bobby, in the 3 years that he's done the report, is it 3 years? Is this your third year? Yeah, has really improved. We always had really good quality reports, but now they are so organized and done in such an efficient manner because he's spent a lot of time organizing how we sort data and tabulate the data, that it's helped the auditors and it's helped him be more efficient and us, kind of produce a financial statement that anyone can say, where is this number, and he can trace it right into, okay, this number in our, the millions of transactions that go through our financials, he can tell you exactly where that number is on the financial statements. And it really helps with transparency. It really helps the auditors. So he's done an outstanding job of improving, I guess, the background of our finances, like cleaned out the little closet where we keep how to produce a financial statement. So it's really helped. So I appreciate that.
That's a big plus, so
Yes.
thank you for that. I think the other thing that we as a finance committee really appreciated, we talked about last time, was also his creation of the popular
Yes.
finance report, because that is really easy for citizens to use, and it's in a user-friendly format with some graphics and charts. So it makes it easier for us as alders to explain stuff to people about our budget. And, too, if they download that item off the website, it's really easy for them to read and without sifting through our entire budget, which is pretty cumbersome. So, thank you for that.
And I think, the GFOA and the the board that dictates how we're supposed to present this information has really been making a lot of changes pretty rapidly in my mind. And it's been, like, it's hard enough for the accountants to keep track of all of the changes that we're supposed to make. I don't even know how a reader of a financial statement can adapt to all of the changes. I don't know, I'm, like old school and have kind of a cynical view of all of these changes that they're making, because I think, in their goal for transparency, it's just gotten cloudier and cloudier in my mind, but like I say, I'm old school.
Excellent. Thank you for that. Does anyone else have questions for John at all? Deb's virtual hand is up. Go ahead, Deb.
All right, I was at the Housing Authority meeting at noon, and we talked a little bit about, because of the pandemic, that there was distance type of auditing being done. And I would think that same thing applied with the city this year.
That is correct.
So it makes it a little bit more difficult about, looking up vouchers or getting information and then going ahead and emailing it or PDF files to the auditors and not being on site. So you kind of lose that communication connection. It makes it a little bit more difficult, but you've got to continue doing audits during a pandemic too.
Yeah, the beneficial part of the city audit was half of it, or probably about 40% of it occurred before the end of the year. So we do interim work, we do preliminary work. So we did a lot of that vouching and all that stuff, luckily, before January 1st. So that helped considerably. And then we did come on site for the city audit, which is a little bit different than the CDA audit, but we did come on site just because of the size of the audit and so forth for a limited basis to do some of those things you're talking about. But I agree, it was a necessary thing, and again, we appreciate the effort that went in, the entire city staff to allow us to do that.
Good, thank you.
You bet.
Anyone else have questions or comments? If not, then we'll place that report on file. Should be all set. Thanks, John, for that overview.
Very good, thank you.
That'll bring us then on our agenda to item number 3, which is discussion and possible action regarding a budget modification for the police department. You see a request in your packets to shift a couple line items to cover a budget item that looks like we missed in our budget process, where they had put in for it, but we didn't have it accumulated or attached to our final approvals.
Yes.
And you want to just walk us through that, Mary Ann, or there's?
Sure. So the process is, this is all done via a web application, which the background is Excel spreadsheet. So the departments input their budget, and they can make changes to that budget until a point in time. And they're always doing 2 years at a time. So they do the budget, like this year, they're doing the 2021 budget that they're requesting, but they're also doing a plan for 2022. So when they start working on the 2020 budget, there was already numbers in there from the prior year. And what I think happened is that I transferred over those 2020 budgets from the department request line item to the, executive budget or the mayor's review budget before they were done actually with that account. And, typically I'm looking for things like that, where I try to see that nothing like that has happened, and I try to communicate to staff, okay, we're moving to the mayor's executive budget now, please don't enter line items within your budget. But that's what I think happened, because you can, in my attachment, you can see if we make a change to the department budget, we put it in that change column.
Yep.
And there is nothing in the change column, and then it would move to the executive
Yep.
budget. So it would start out as the department budget, and the changes that the executives made, meaning the mayor or myself, would show up in that change, and there's no change. So that's what I'm thinking happened. Of course, this was, last August when this error occurred. And so to really know exactly what happened. I can't tell you for sure that's what I think happened. They definitely had the detail of why they needed the 150,000. Susan Lang in the police department does an outstanding job of itemizing all of her needs. So, I definitely believe it was, an error on my part in that timing. So the long and the short of it is, they intended to spend 150,000. You can see that they have 150,000 of expenses that they've line item, but their budget only says 108.
So they're
And-
short roughly 86, huh? It looks like according to our transfers?
43.
Oh, 43, okay.
Yes.
Okay.
So, they had received a budget modification early in the year because they thought they were going to, because of events and safety considerations with
Mm-hmm.
the events, they actually got a transfer from the general fund, additional money to their budget.
Yes.
Which they're not going to need now because, there have been no events. So we're really proposing to take 43,000 out of their community service officer wages and move it into this capital budget.
Okay,
And that would solve the problem. Again, this isn't going to, cause long-term problems for us in the future. And, given how many transactions and how many numbers we're dealing with the budget, I think
This
it's
is
pretty
pretty
good.
small.
This is like
It
the
is.
first budget error that we've
It is.
brought to the
this,
council in a
well,
long
and,
time.
and luckily for us, that is the upside of events being canceled, because we did anticipate a whole lot of events before the pandemic hit, and, looking at what the staffing levels for widely attended events should be, we decided to ramp that up. So luckily for us, we had that on hand, and we're able to just shift it back. So, any questions from committee members at all? If not, is there a motion then to approve that fund transfer? Motion by Herbst. Deb's virtual hand is up. Is that a second, Deb? Oh,
I was gonna ask a question.
okay. Was that a second, though? I missed part of your audio. Or do we have a second?
No, I'm not seconding.
Okay. Second by Watson. Now go ahead, Deb. We're ready.
I was just trying to get a clarification. I know in past years we did the new vests. So are these armor vests different, or how many are there being purchased?
I can't tell you how many, but it's, they're continually upgrading their vests, as they, because I think they have actual expiration periods where they have to get new ones, and
Right.
they've got them on a rotation, so I can't really tell you
Well,
how
and the
many
new
there
hires
are.
get them too, because they're
Right.
sized for the officers.
Right.
So if
Okay.
they've had recruitment and new people come on and retirements and whatnot, they probably are getting some for that too, I think.
Yeah, if you want, I can speak to that.
Oh, I didn't know Ben was on the line.
Well, look at
Thanks.
that, there's Ben. Hi, Ben. You want to walk us through?
I wouldn't miss the finance committee meeting for the world. So,
Aw. We're touched.
Yeah, so you guys are right in terms of the vests. The vests expire every 5 years. So every 5 years, we need to purchase new vests for officers and detectives and sworn staff members. And then in addition to those vests that we have to purchase annually, we have to purchase new vests, obviously, for our new hires. I don't know the exact number, but we also have a vest grant that we've been operating with for a number of years. The federal government covers half the cost of those vests. So if you tell me how much money is allocated, based on, then I can tell you how many vests that is. but-
$12,345.
12,345, so
Yes.
that means that we
2, 3, 4, 5.
probably have 10 or 12 vests somewhere in that vicinity to purchase this year.
Okay.
Yeah, I thought they
All
were
right.
like $800.
Any additional questions? Okay, Deb, your hand is still up. Are you good, or do you have another question?
I'm good.
Okay, all right. So with that, we have a motion and a second on the floor then to approve the transfer. Members in favor signify by saying aye. Aye. Opposed? None are opposed. That motion carries. All right. And so we've got then, let's see here. Item number 4 is discussion and possible action regarding a resolution providing for the sale of approximately $5,445,000 of general obligation promissory notes, Series 2020D. And I believe we have Phil Costin with us on the line from Ellers to talk about that. All right, can you hear us, Phil?
I can hear you. Can you hear me?
We can hear you. Go ahead.
I have my video up, I believe,
Yeah,
as well.
we can
Here
see
I
ya.
am. I don't like looking at myself, though, you know. Good evening, everyone. Mary Ann, do you want to provide a little info, or do you want me to
No,
dive?
I can introduce it. So, really, the debt issuance for 2020 is set into motion when we adopt the budget back in November of 2019, because the capital budget is approved, and the tax increment district budgets are approved back in 2019, and then the financing sources are established for those capital projects. And so capital projects are funded by a variety of things. It could be grants, it could be levy dollars, it could be special assessment for streets, it could be for cash that a tax increment district has on hand. And then, any shortfall, I guess, of those items is typically debt proceeds. From a CIP, so our regular street projects and things like big roof replacement, special equipment, maybe a replacement of chillers, things like that, typically are part of the CIP. With our annual CIP, we try to stick around $2.5 million of borrowing each year. Now, certainly, we'll have some extraordinary things that we're borrowing for. Last year was the new fire station. We've done the swimming pools in the last few years. And typically when we're borrowing for CIP, we're doing a regular flat payment each year. So, the first payments are going to have a higher interest payment, and then as we pay off that principal, it becomes more principal and less interest, just like your home mortgage would be. And we always issue on a 10-year basis. So each year, in theory, we have that 10 years ago, the 2.5 million that we borrowed falling off and getting paid off, and that creates opportunity to borrow this year's $2.5 million. And we've been staying very consistent with that pattern. In addition to those two components, the, new big projects like the fire station and the capital improvements, we also have the tax increment districts. And of course, TID 6 and TID 7 were reaching their maturity, so we knew what the increments were going to be in those districts because they're very close to retiring. And so we were basically finishing up all of our capital projects that had been included in the capital plans, and we now knew the districts had sufficient increment or would have sufficient increment over the rest of their life to pay for those. So when we add our tax increment districts to our CIP plan and our fire station, and just to give you a background information, last year when we did our issue for the fire station, we looked at the budget, and typically when we're doing a new building like that, we'll do a 20-year issue versus a 10-year. And we carved out the contingency, and we carved out all of the furniture and fixture out of that borrowing. And we said, let's not borrow that over a 20-year basis. Let's see, number one, if we need the contingency, and number two, we'll add it next year to the 10-year to try to reduce overall the amount we borrow and to reduce how long its life would be, given that, it's hard to imagine that furniture would last 20 years. Maybe it does. I know they're carpeting, I think the carpeting that we're trying to replace right now in the fire station and CIP is 25 years old. So I could be wrong. But anyhow, so that's why we've got this final fire station added to our project. So when we add all of these up, it comes to $5,346,000 that we would be borrowing in 2020. And that is in addition to some funding that we did earlier this year with the state trust fund. We borrowed back in April because we had some timing considerations with our tax increment district that we needed to take into consideration. And we are only issuing that debt for 5 years. And our goal is with the state trust fund loan, you can basically pay it off early at any time. So there's really no call features that you see in regular debt that you have to be worried about. And there's really no cost to debt issuance because we can just do that ourselves and we don't need bond counsel's help. We don't need financial advisors. There's no costs associated. So we can look then, once this year is over with and see whether we could, number one, retire it early, or we could look to refinance it to a cheaper debt if we wanted to. But that's basically why we went out early and took care of that tax increment District 6 debt. So, and then we have a second issue that we're looking at, and that is to refinance a taxable general obligation bond that we had outstanding. That was issued back in 2017, and it basically built the business campus expansion for Great Lakes Cheese and Wausau Chemical. So it paid for all of the underlying infrastructure that is out in that district. And at the time that we issued the debt, we basically issued, I think it was a 5-year note that said we would pay it off in full in 2022, and that financing strategy was really designed to give us time to see what kind of capacity Great Lakes Cheese and the Wausau Chemical deal would provide to us so that we could match that future debt amortization to what the increment was when it was coming in. So it's due in full in 2022, but it's callable now. So, given the low rates, and given that we now know that the increment for Great Lakes Cheese and Wausau Chemical is going to be more than sufficient to retire the debt, we're suggesting that we refinance that now rather than waiting until 2022 when it actually matures. And then we're suggesting right now that it be a 15-year amortization, again, towards the end of that life, if that district is, flush with increment, we could call that debt early. The other thing is there's another anticipation note in that district that funded the Wausau Chemical development payment, and that actually will be callable next year in 2021. And so, if as more information is revealed to us on the increment that we're generating in that industrial park, we could do that one, let's say, for a shorter interest rate or for a shorter life, and interest rates, if they scooched up next year, we'd actually be, that would be a shorter life debt, and so the interest cost wouldn't be as much. And so that's, I guess, the strategy that I had in looking at how we should fund that refinancing of the taxable bond. So it's the promissory note, which is a 10-year issue, again, level principal and interest payments, the refinancing of an already existing debt, again, with level principal and interest payments over that 15 years. The issues will not increase or create an impact to our levy. We've been levying about $4 million, somewhere between $4,160,000. Today, it's like $4,123,000 since 2002. And either one of these issues will not impact our requirement to increase that. As far as the impact to the debt outstanding, it will decrease by a small amount this year. In 2020, we'll be retiring about $17 million of debt, but we'll be adding $15 million. Of course, some of that, again, is that refinancing. So the net reduction in outstanding debt for GO and the anticipation debt would be a reduction of $1,900,000. And then, as far as our outstanding debt projected, as I said, you can see on my chart that it drops dramatically over time. Again, that's assuming that we don't do any big TID projects, and we know that maybe there's a couple of them out there kind of lurking in the future, or that we don't do any big capital projects, which we know that Public Works facility is looming out there. But you know, when you look at how our debt should be retired based on our annual $2.5 million, we will see some major drops in our outstanding debt in the future. So that's just what I wanted to say. So go ahead, Bill.
Well, as usual, Mary Ann did a wonderful job outlining the two issues that are coming up. Maybe I'll highlight a few other items quickly and then take questions that you may have. One thing I wanted to do is talk a little bit about timing, because we are a little bit tight. Our goal here was to try to take advantage of the low interest rates, the current market conditions, and try to sell these, both these issues in the month of August. So if it advances out of Finance Committee, we'll be bringing this to the Common Council for authorization at your August 11th meeting. And then on August 25th is when we would have the actual final sale results and final approvals that evening. That would enable us the ability to close on these two issues on September 16th. So it's a relatively tight turnaround. A couple other items in the packet that we have provided, and I know you have those handy starting on page 16 of your board packet. As Mary Ann explained, the city has been very conservative in your approach of paying back debt. And she mentioned a very level 10-year on your capital, and then structuring your TIP debt to be able to take advantage of the revenues that are coming in and potentially closing out early. So that's reflected in the documents that we have identified as well. Finally, that the two last items, your AA3 rating for Moody's, we're always very mindful of that strong rating the city has, with the intent that we want to make sure that you retain your rating and you set yourself up for hopefully in the future an upgrade. That quick maturity payment, that 10-year payment, is something that Moody's does take a look at, along with that levy number that Mary Ann referenced as well, that $4,123,000. As we do our analysis, we are working towards making sure that we don't see an increase in levy, but rather trying to keep that stable or declining on an annual basis. So those are two significant factors when it comes to that rating report. I mentioned where we are in the financial markets, and it's been a roller coaster for the last 4 to 5 months, but I can tell you the last 6 to 8 weeks, we have seen things really stabilize. A number of years back, I came to a city council meeting after a general obligation note award, and the rate on that was just under 2%, about 1.98%, if I recall. And I thought to myself, we'll never see rates like this again. Well, today, for a highly rated community similar to Wausau, for a 10-year note, we're seeing things closer to 1%. So we are really anxious to try to get this financed, both of these items financed in the current market conditions. We certainly have provided also the one-year bond chart that kind of gives you a feel for what's happened in the bond market over the last year. But we could say that over the last 6 weeks, again, 6 to 8 weeks, it's been pretty stable. We're seeing great results and a lot of interest in different debt issues that are out there. That's about all I had. More than happy to answer any questions you have, but again, this will go back in front of the full council if it advances out of finance for your August 11th meeting, and then the final results will happen on August 25th.
Okay. We have a question from Alder Ryan. Go ahead, Deb.
didn't know I had my hand up.
Oh, your hand is up, but now your hand is down, so we're okay.
All right, thank you.
Does anybody else have questions for Mary Ann or for Phil about the refinance of the one issue or the new issue? Yeah, and we'll take them separately, so if there are no questions, is there a motion to approve the bond sale for $5,445,000? Motion by Martin, second by Herbst, and we'll do a roll call vote on this. I actually forgot and did a voice vote on the last one, but we saw Deb say aye. So on this one, Martins? Aye. Ryan?
No.
Watson? Herbst?
Aye.
And I'll vote aye as well. That motion passes 4-1. Item number 5 is discussion and possible action on a resolution providing for the sale of $6,740,000 of taxable general obligation refunding bonds, Series 2020E. And those bonds we just talked about as well with our synopsis from Mary Ann and Phil. Does anyone have questions on that item? If not, is there a motion to approve that item as well? Motion by Martins, is there a second? Second by Herbst. We'll do a roll call vote. Watson? Herbst?
Aye.
Martins?
Aye.
Ryan?
No.
And I'll vote aye as well. And that one also passes 4-1. So we'll take those to council, both of them, for the first meeting of August. And we'll have Phil back with us at that time to answer any questions from the rest of the council as well. Okay. Thanks, Phil, for logging on and walking
Thank
us
you.
through that.
Thank you.
Thank you. Have a good night.
Thanks, you too. Item number 6 is discussion and possible action regarding the June 2020 general fund financial statement. Mary Ann, if you want to walk us through that item?
Yeah, not a lot of changes in how things are going. With the year, of course, we're continuing to see a lag in licenses because of the restaurant and bar establishments struggling with their opening and trying to figure out what they want to do, as well as, the bartenders not necessarily working at this time. Permit fees, we've blown past our budget already for the whole year at 287 versus 275 is our budget. And we've surpassed last year at this time. So that continues to go very well. Fines and forfeitures, again, lagging. We've been predicting that, there was not a lot of activity during the COVID period. And we've been seeing kind of a decline in fines to begin with. So we're not really expecting to meet budget, but we've been kind of expecting that all along. And we will, be looking at that in preparation of the 2021 budget to do a better job of anticipating what our fines and forfeitures will be. From other public charges of services, at this point, we haven't seen a major decrease through June. Of course, we will eventually, because all of the park, all of the swim lessons, all of the swim fees, none of those will transpire this year. But as we've explained, on the expense side, you don't have any of the lifeguard expenses. So it's not, the net change for the city is actually one of positive, because maintenance of pool activities typically costs money. We don't make money at pool activities. So even though we'll see eventually a decline in those revenues, we aren't at this point through June 30th. Our interest on investment income, as we've predicted, is going to be down from last year. I still believe that, at this point, we're showing $632,000 of investment income in a budget of $500,000. Some of that has, if you recall, we have to adjust our investments to market. So if we purchase an investment when interest rates are high, if we were to sell it today, we could probably make more money at it because the person is willing to pay for that future interest. So it's got a premium on its value. that goes away over time as we hold the investment and it comes closer to maturity. But we will definitely make budget this year in investment income. And so, from a revenue standpoint, I think we're looking good as we come to the second half of the year, and not anything that I'm overly concerned about. We're fortunate here in Wausau that we're not experiencing major declines in our revenues, but that means we don't get certain revenues either, like sales tax. From an expense standpoint, I think, again, we're doing well in the general fund. Nothing of major concern, just pointing out that Department of Public Works is running at 3.2 million through June 30th of this year versus almost $4 million last year. Again, a lot of that is winter maintenance that we had in 2019 that we're not experiencing in 2020 due to the mild winter, and the budget of 6.9 million, so there, no concerns there. So, again, I'm thinking that we're sitting in a good situation as we enter the second half of the year.
Okay. Does anyone have questions for Mary Ann about the report or anything contained in the report? If not, we'll place her report on file. Item number 7 is our last item, discussion and possible action regarding special event fee refunds due to COVID cancellations. We've got a pretty good memo in our packet explaining this, that we obviously charge for the processing of event permits, and of course, there are no events. They don't yield a ton of money, but the event community in good faith paid for permits that they can't use, and so it looks like we would like to get approval to give those back to the organizations, and certainly hope that they're able to conduct their events in 2021 and that they all apply again. Is there a motion to approve that refund? Motion by Watson, second by Herbst. Does anyone have questions about that? Oh, Deb's hand is up. Go ahead, Deb.
Make the motion.
Oh, okay, sorry. Okay, and so with a motion and a second on the floor, further discussions? If not, we'll take a vote on that item. Watson? Herbst?
Aye.
Ryan?
Aye.
Martins?
Aye.
And I'll vote aye as well. That item will pass unanimously. And that's the last of our agenda for tonight. So I'll take a motion to adjourn. Motion from Watson, second by Herbst. Members in favor signify by saying aye. Aye. We'll stand adjourned. Thanks, everybody.